Good afternoon to everyone, and welcome to the first Engage for ESG webinar of 2025. So happy New Year, even belated. We have a very packed agenda today in terms of the overview of the sustainable finance landscape. We'll go through the agenda first, and then we'll pass through to the great speakers that we have today. So in terms of the speakers, we are delighted to have Denisa Vermaert. She's a senior policy advisor at the European Banking Federation, and she's going to be followed by Katia Alves, corporate sustainability director at Unión de Créditos Inmobiliarios, and including myself, Mark Van Geben, head of business development and regulatory affairs at European Network House. We'll also have Vincent Mahie from he's the head of energy efficiency and regulatory technology at Hypoport. Next, please. So we'll briefly provide you an overview in terms of the Engage for ESG initiative. We are now well advanced in the project, lasting for 3 years, and then we'll give the access, the ball to Denisa, where she's gonna explain to us the omnibus simplification effort. This is very timely in terms of also the announcements from the European Commission, and in particular the view from the European Banking Federation. Then we're going to pass on to Katia Alves in terms of the UCI experience in filling in and completing the Engage templates for EU taxonomy alignment. Then we're going to move to the regulatory updates. Vincent and I together, we will dwell into some of the latest developments. And then last but not least, we will go into and describe how you can become a trial user and participating also in the upcoming Engage events. We have some also in person coming up. So next, what is Engage for ESG? Actually, as you can see here, it's a initiative spearheaded from the European Commission and is based on 2 deliverables mainly. First, a template for real estate data, and then a portal that helps to assess the EU taxonomy alignment. As you can appreciate, there is a whole host or raft of regulations that we need to comply with, starting from General Data Protection Regulation, the EU taxonomy, and the delegated acts, but also the relatively new Energy Performance of Buildings Directive number 4. And we have actually today the pleasure to have one of the 2 pilots, i.e. UCI, talking about their experience. So next. What are the templates and what is their structure and their modus operandi? When we developed the templates over the last couple of years, we started off with the ESMA underlying exposures template for residential mortgages and consumer loan, i.e. Annex 2 and Annex 6. And then we looked at how to comply in terms of the EU taxonomy regulation for mortgages, for the acquisition of new buildings and existing buildings, and also in terms of loans for the renovation of existing buildings. Next, also, we are going to be including the European Investment Bank information requirements, like, for example, the green eligibility checker, and then we will also consider the European Central Bank stress test fields related to climate change. Next. Perfect. And then over to you, Denisa.
Yes, thank you very much, Marco, and thank you for inviting me. Maybe to manage an expectation, if you are here to, because I will be able to tell you what will be in the Omnibus Directive, the simple answer is I don't know. But of course, we have some indication, and I'm also happy to talk about the expectations of the European Banking Federation and the banking sector. If we can please move to the next one. So you will probably all remember that in March 2024, and that was a little bit surprising at that time, the president of the commission announced that they will be reducing the reporting burdens at least by 25% for all companies, and I think they said also 35% for SMEs. So now moving forward, in November in Budapest, she announced that there will be an omnibus simplification legislative initiative that will cover the three cross-sectoral regulations, legislations, which is the Corporate Sustainability Reporting Directive, the Due Diligence Directive, and the Taxonomy Regulation. So this omnibus proposal is expected on 26th of February this year. And exactly, there is a lot of still speculation going on. What exactly will be covered? Will it be only these three legislation? It will be level 1 or level 2? So there are still a lot of questions, and I'm not sure at this point in time even it's clear or set. But we have some indications also. Like yesterday, the Commission published the competitiveness compass. So what is clear that the Commission intends to align the reporting and with the needs of investors. They were talking about proportional timelines. They are talking about focusing on financial metrics that will not discourage the investment in smaller companies in transition. They are talking about more proportionality. And so to focus on reporting obligations that will be more proportionate to the scale of activities of companies. They are also talking about the new definition of small and mid-cap companies. I think somewhere I read, if I'm not mistaken, there might be almost 30,000 companies affected. Those are those that are currently between the SMEs and large enterprises. So these companies should not be in according to this, probably out of the scope of the CSRD, the Corporate Sustainability Reporting Directive, but maybe subject to some simplified requirements. And of course, Commission has an interest to address the trickle-down effect. So bringing in scope indirectly through value chains, either through financial sector or through larger companies, the small companies that are not in the scope of, or was not intended to be in the scope of this legislation. So this is the omnibus package, and interesting enough, it's yesterday it was very clearly stated this is the first omnibus package. So what can we expect further? Probably like some stress testing of the EU legislation, some reality check going forward. That's all the words that the Commission is basically using. The legislation going forward, we expect that this will be done both through competitiveness lens and with the simplification objective in mind. And of course, with a question mark, because of the first omnibus, are we going to have maybe another omnibus or like fitness check or something review of the sectoral legislation? I will explain that a little bit later, because that's something that is very important for banks, that we are not subject to reporting obligation that our clients are not, because if these requirements have to be reviewed symmetrically. And also in the competitiveness document, there was a mention of the review and the simplification of the carbon border adjustment mechanism, in particular for smaller market players. If I can ask to move please to the next slide. Okay, so how are banks impacted? And I'm going to focus on the three set of legislations that are in scope or the envisaged scope of the omnibus. That's the CSRD. And so the Corporate Sustainability Reporting Directive. And here it's quite tricky in a way, because banks are both users and preparers. So CSRD is for us a really important source of data, and for two reasons: for banks' own reporting, because we are also subject to CSRD reporting ourselves, but also the SFDR, the System Finance Disclosure Regulation, the Pillar 3 risk disclosures under the CRR, the Capital Requirements Regulation. But even if it would not be subject to any of this regulation, banks still need data. They need for their own risk management or portfolio alignment. So basically, to run a sound business, we still will need data. Again, I don't think there is any bank that would say that all the data from the CSRD, far from that, are needed. But there are core data that if we remove, we will have to get to them bilaterally. And again, that we have this trickle-down effect. On ESRS, of course, we will be also preparing reporting based on the ESRS. So for now, what we see that banks preparing under the sector agnostic standards, we are not saying that we need sector specific. What we are basically saying that we need a guidance to help us to navigate how the sector agnostic standards, in particular value chain or materiality, have to be applied in the banking sector. And there are also a couple of specific data points that we see that they are not fit for the sector. So this is what we are talking about, maybe more urgent need of guidance on the sector agnostic for specific sectors rather than developing of sector specific standards. On taxonomy, how we are affected. And again, maybe before that, I would like to say that taxonomy for banks, it's a very useful engagement tool. So banks, and we see that some are telling us, we are using it, for example, to design even some financial products like sustainability-linked loans. We take some of the technical criteria from the taxonomy, and we design the way, the transitioning way for the companies. And, when they are meeting some threshold that are like based on taxonomy because they have to be science-based, then, maybe customer can have a better interest rate and so there is a pathway in a way that taxonomy is used. But taxonomy as a reporting tool, we are rather questioning the usefulness of that. There is this green asset ratio that banks have to report. The way that it's designed right now, it has a very limited usefulness. So we are actually asking the Commission to look at that and reassess the usefulness or redesign it. On the corporate sustainability due diligence directive, so banks are scoped for the upstream value chain. And of course, also banks are subject to the transition plans requirement on the CSDDD. So this is the way that we are impacted by these three pieces of the EU legislation. If I can ask to move to next slide, please. So, what do banks think about Omnibus? First of all, we really welcome the Omnibus initiative. We actually asked for that already last year, that we will need to look for the consistency, for the simplification, for looking at removing duplications, for some kind of reality check across several pieces of the EU law on the sustainable finance, related to sustainable finance. So we very much welcome the Omnibus initiative. As I was saying, like one of the key points for us is that the Commission and also EU institutions after that in the revision, they have the symmetry, both in content and timing in mind. We need to preserve key data, also timing. You cannot remove it from one side, ask it then banks, or like when we look, for example, about materiality. So if something is not material for the clients, we cannot expect that banks are going to report the same data point that regardless of the materiality. So we have to really look at this symmetry to maximum possible extent. But also, actually, it's not only, keep in mind also, it's not only for the, let's say, regulatory or reporting requirements, but there is also something that, that banks will have to do in any case, and there is a risk management, that there is certain amount of data that would be easier for everyone if they are reported in a standardized way. So we avoid like a need for some questionnaires or bilateral engagement that will not be in line of the simplification. If I can move to the next one. So, So maybe I already, because I covered some of the points that are here. Maybe I will focus a little bit more about simplification. So what we are also, when I focus on the taxonomy, and of course for the bank, one of the key reporting burden is stemming from this green asset ratio. So green asset ratio is like a portrait, or was supposed to, one of the objective was to see where the banks are putting the money, whether it is in line with the taxonomy. But the last 2 years, this is the second year of reporting. The first year of reporting, it showed that these ratios were really not comparable, and banks have a difficulty to assess the taxonomy alignment for the clients. Mainly the ratio was around mortgages, and also that was very incomparable. Like in some countries, the ratio was around 10%, in some countries 1 or 2%. It was very much depending on the interpretation, whether they, for example, in the mortgages only also looked at the do no significant harm criteria or not. So the comparability was difficult. Some of the key use cases, like mortgages of cars that you would expect there to be reflected in the green asset ratios, were not, because of the lack of documentation, lack of data, lack of ability specifically for retail clients to document the DNSH and the minimum social safeguards. So what we are proposing, again, as I was saying, maybe reassess the usefulness. Is it used by investors? For what reason, if at all? Is it used by banks? Is it helping decision making? Is it helping allocation of the capital? So these are questions that we hope that Commission will be asking in this omnibus. And if they decide to maintain it after all that, so we would recommend a very substantial revision of the do no significant harm, and in particular criteria. We believe that for retail clients, they should not be, banks should not be expected to check DNSH or minimum social safeguards. For the other clients, we expect substantial simplification. Also, do no significant harm criteria that refer to or are already required by an EU legislation. It should be in principle automatically aligned. Simplification of the alignment processes of the assessment processes for the taxonomy alignment for corporates also. And also, once taxonomy, something is taxonomy aligned, it will be very helpful that it's kept that way for the use of proceeds. So that would simplify also the let's say administrative burden with this. There are also a couple of KPIs, indicators that are not yet in place, but are supposed to, banks should report them in next year. But in order to do that, banks have to start preparing the processes already now. So this is in particular, I'm talking about the KPIs for trading book and for fees and commission. So if we believe that usefulness of those is questionable. So if they are suspended, we need to know as soon as possible. So in order to avoid significant costs and resources to developing that, developing a KPI which may be suspended later. Maybe I didn't mention, so this was on the taxonomy, on the CSRD. What I didn't mention is the ESRS, the sectoral ones. Really, so even the simplification objective should be also communicated or be clear also to the EFRAG in the development of that the later on of any other guidance or standards. It has to be simple and only if really necessary, which for now we don't see really the need for the sectoral standards. And on the CSDDD, of course, banks are, I said the scope is limited to the upstream value chain. and we would be very much against any extension of that to the downstream value chain. This will be against this objective of avoid trickle-down effect. This will bring in scope indirectly more companies, including probably those that were not meant to be captured. So I think that would be in my 10-15 minutes to the main or key points. Of course, we have been developing a lot of concrete recommendations. Also, we were talking to the Commission, which are the data points that we really need to be kept, that are essential. And but I think we in general believe there is a major room for major simplification.
Perfect. Thanks a lot, Denisa. This is great because we are starting from a high level and then we are going to more a detailed level. And thanks to Katia because she made the time during this very busy period in terms of the reporting to really tell us what is the experience that Unión de Créditos Inmobiliarios, as a pilot, an official pilot of the Engage for ESG initiative, has been experiencing over the last couple of years, really helping to make these templates operational. Katia, over to you.
Thank you so much, Marco. Very nice to be here. Hope everyone is well. So first of all, I would like to share with you all that in order for us to fulfill and to help in the templates and to give data, we have to, first of all, we have to design what would be our loan granting process. In that time, we have separated in two parts, what is the mortgage loans and what is the renovation loans. And inside each one of them, we have to separate what are origination loans and what is portfolio. Because when you report, when you make the reports and when you collect data, you have to imagine what is already in your portfolio, the things that have already been granted, and the new origination loans. In that matter, for origination loans and for portfolio, we have understood that we have to check two things. The credit risk analysis, that is one part of the process. When we want to give a loan, we have to analyze our credit risk analysis. And in that sense, we have to identify what is the client's rent, what is the client's salary, what are the client's bank account, and we have to collect all of this information to make a reliable credit analysis. And at the same time, to fulfill all what the tsunami, the regulatory tsunami that the European Union is asking us to fulfill about the energy fields of the properties, we have to start asking them as well. Okay, now I know what are your credit analysis. I know what is your score, your risk score, but I have to understand now the property that you are asking us to give you the loan. So in that kind, in this matter, we have identified also very key elements that we have to ask. The appraisal document is key for us, inclusive for the LTV and for the credit analysis. But at the same time, the EPC, what is the property EPC, and the information related with the collateral, all the information that you can imagine. So for the origination loans, we have these two things. For the portfolio, we have split in two. The portfolio that we have originated until 2013, we have to search for a partner to fulfill the information about the property regarding the EPC. So was no mandatory information, the EPC, before 2013. So we had to contract with a partner that was global, that give us the estimated EPC of that time for the portfolio. And for the ones that had been originated after 2013, So in that case, we had that information digitalized in our system. So we had to develop an OCR process in order to capture the information about the letter of the EPC, the information about the CO2 emissions, the information about the kilowatts per hour per square meter, and who was the engineer who made the EPC, the date who was made the EPC, etc., etc. So we have certain circumstances ourselves, and I imagine all the market itself. Next slide, please, Maitani. Thank you. The same for rehab loans, for rehabilitation loans, to renovation loans. The renovation loans in Spain are not mortgages, so you don't have a collateral. The collateral, it's a personal loan. So it's the same, the process is the same as giving a loan to go on vacation or to send your kids at university abroad. So in this kind of process, we have mapped the process as well, and we have identified the same origination and portfolio. For the origination, we have the credit risk analysis, the same. If the homeowners association is able to pay the loan each month, the monthly loan, and we have to analyze as well the property analysis. For the property analysis, we demand the building renovation project, because an architect has to develop all the project of the business of the building envelope. We have also we demand as well the building passport, something that the European Union has amended for us to know what are the expectations of the building. So the building passport, very important. The building EPC, it's different, the building EPC than the flat EPC or the house EPC. Sometimes they may be different because the orientation, because the level where the flat is, etc., etc. And all information regarding the building for analyzing if the building will be eligible or not for taxonomy matters. And at the same time, for the portfolio, the project management, okay, I have to understand what is the management of the outstanding value and the work in progress that is going to loan the amount, and the project closing, that is after the renovation works are done. The renovation, when it's done, I demand a lot of information in order to get in my database the information I must have to report to the Pillar 3 ESG. That is the final EPC to assess the energy savings at the end. Imagine that you are going to ask now for a loan to make a renovation to your building. In the beginning, you have the project, and the project says that you have to fulfill, you have to make some renovation works, and you expect to have 35% of energy savings. So this expectation will be confirmed or not at the end of the renovation works with a final EPC. Next slide, please. Okay, so the timeline, very important, the timeline, because all of this, this information, this timeline, this documentation that we demand to put in our system is crucial for us to at the end report, to make a good report. So we have the mortgage loans once again and renovation loans. We split them up because the things I told you before. In the origination loans, you have nota simple, certificado de tasación, it's appraisal document, the deed of the taxation, the label of the energy efficiency, and then the energy efficiency certificate. In Spain, we have two, the label and then the EPC. And then we grant the loan. Only with these documents, only with these 2, 4, 5 documents, we can do the grant. In terms of the renovation loans, we have the building renovation project, where the architect explains everything he's going to do, the EPC certificate, the first part of the loan, because we don't give all the loan of the renovation. Imagine yourselves that you are going to renovate a building in Belgium, and the renovation would be about 1 million euros. So I will grant the 1 million euros. Nevertheless, I will dispose the money by parts regarding the work progress certificates. So I give the first part of the loan in order to prepare all the building for the works, to make all the andamios and things to the building, to start the project. More or less it's 15% of the total of the amount. And then with the work progress certificates based, I will dispose the rest of the loan. When the renovation works end, the architect will send out it's called the closure final document of renovation works. So with that document, I close the renovation works in my system, and I demand the EPC. Please give me the final EPC. With this EPC, I would check if the estimated EPC or the improvement EPC as we have achieved or not what was estimated. Next slide, please, Maitami. Thank you so much. So we have the processes, very important. We have to map the processes, to report to the Pillar 3 ESG, to report to the CSRD, to report everyone, to the shareholders, to the stakeholders. So you have to identify all your process. But when you do the process, at the end, you have to identify who are the owners of each information. And when you identify who are the owners, you identify the people who is in the team, even though you don't understand that they are part of the team, but they are part of the team. So we have the ESG team, that is my team, that identifies what kind of information I need to report. But at the same time, I have to have the tech lead, the IT guys they are crucial. They are a must to have in the team in order to say to you where the files are, where the information comes from, what kind of appraisal document are we talking about, if it's in the beginning or after renovation, etc., etc. So very important, and they are crucial, and they are internal team. You have the business analyst, also very important, because they say, attention, we have the final certificate, the final renovation certificate. We have to ask for the EPC. Okay, so they are the triggers. They are the first one in line that says, attention, we need this attention. We cannot close the process if we don't get that. And then we have very, very, very important, the salesperson. I say this all the time to all webinars I participate. It's very important to have the commercial people on your side and to understand your needs, and to see that everything that you're going to ask in the beginning is useful for something, even to have a rebate on the interest rate, if it is to report, to give you brand and communication schemes, whatever. It's very important for you to have the salesperson, the commercial team on your side, and understand you in terms of getting the information, the EPC, for instance, the energy efficiency label at the same time, the first analysis of the project of the rehabilitation work. So it's very important. And the last but not the least, the engineer, the architect. That is the person who is going to say, okay, now the building is done. Okay, the house is good to go. And this is the final EPC. This is the final building passport, etc., etc. So these people that are outside, these engineers that are outsiders, are the ones that are going to make possible you to advance in data collection. Or else, if you don't have them on your side, you don't have the data collection. Another slide, please. Okay, this is to presume ourselves that in order that, as you most of you may know, UCI has been in this challenge since 2017 when we integrate the DML team, I would say, or the project, when we started participating in the Energy Efficiency Mortgage Action Plan and Horizon 2020 project. And at that time, we started collecting data and we started to design all the flows that I'm talking about. So at that time, in 2017, that's a long time ago, honestly, but this journey has made possible that right now we have achieved the highest score in the templates, because we are able to extract, to obtain all of this information that ESMA requires about energy performance due to this mapping, this process mapping, and due to this struggling with the internal teams and with our commercial teams, etc., etc. So now it's already in our DNA. When we talk about ESG in our company, in UCI, we talk about ESG plus B, plus business. It means that you may have a great ESG team, but if you don't integrate the ESG into the business, it's very hard to get the information you need about your portfolios and the origination. Next slide. Okay, this had been the first traffic lights classification that we identify in the template. When we developed the template to have an optimized template, we have identified 3 colors. Okay, let's look to our database and let's see what we already are able to provide. It's green. What is easy to provide? Yellow. What is impossible to provide? Red. So, and this time we conclude that no information was impossible to obtain. There was information that was already in the system, and most of the information that is not already in the system, that we are struggling to get that information in the system, is information that is required by the European Union. Even if it is by Pillar 3, even if it is for the stress tests, even if it is for the CSRD. So it's information that if you don't have now, you have sooner or later to have it in your systems. So as you may say here, you have the climate area code. The climate area code, I don't capture that information in origination. So I have to get an automated system in order, if when I put the code, the geolocalization of the loan that I'm granting, if it is a mortgage or a personal loan, doesn't matter, to identify what is the climate zone, the climate area code. So this I have to work with maps, with information about ministries, about the energy transition ministry, about the other ministries as well, to get this information and to automatize this information. But I would like to highlight the fact that this is a good to have, as my deputy used to say, this is good to have now, but in the future, a very prochain future, a very 1 year or less future, it's a must have. So the should will convert to a must. So we are already at UCI working in this should have. It's nice to have. Next slide, please. Okay, this is the same. You can, Marco, I think, can share this presentation with you, and you can go whichever data field. And if you have any doubts, be free to ask. And if I must say the benefits and the challenges, the benefits of being in this engaged project and to fulfill the information about in the framework is that gives us self-assessment to verify the percentages and information about the relevant points, reduces the time consuming that we have when we report. Okay, I have to report to the EIB, I have to report to the European Commission, I have to report Pillar 3 ESG, I have to report to my shareholders, I have to report to my ESMA templates when I go for a securitization. So if I have everything in a hub, in a one-stop shop, perfect. Loan by loan, very important, loan by loan, fantastic. So these are the great benefits. and everything related with brand, reputation, communication, etc., etc. The challenges are about some classifications that we have inside our range of scope, that is Spain, that we have to align with the European Union. I imagine all countries are the same. We have some challenges. Italy must have another challenges, Belgium another challenges, but most of that are the templates that, and they are harmonized, that we have to give. And very important, the physical risks of the property, because they are not mapped. In Portugal, they are not mapped, they are not available. They are doing some mapping related to these physical risks exposure. And in Spain, also the Energy Transition Ministry has already started to make also these geology maps to identify the risk exposure, if it's for floods, if it's wildfires, catastrophics like earthquakes, etc., etc. So these are the main challenges, to collaborate and to cooperate with our ministries, local ministries, in order to get this information and to, tag our portfolio, our properties, and to identify if they're exposure or not to these physical risks. And my next one.
Perfect. Thanks a lot, Katia. This is extremely helpful. And now we can move to the regulatory updates. So, as you may have seen, at the end of 2024, the European Securities and Markets Authority has published a feedback statement regarding the consultation on the Article 7 of the Securitization Regulation. Is the article that basically regulates what information needs to be delivered. And I'm happy to say that actually Engage has been mentioned in the feedback statement in terms of the responses that have been received from the consortium, and in particularly some of the recommendations to include specific climate risk related factors. Sorry. I think next. Yeah, and I pass the ball to Vincent here, because there are some interesting developments from the European Commission side, and there is also, even more importantly, a consultation which is due on the 5th of February.
Yeah, hi, Marco. Thank you. My name is Vincent. Just to pick this one up, we wanted to highlight that we mentioned that in the last webinar, but on the 29th of November last year, a new draft Commission notice came out, and I know that a lot of new people have been dialing in today's session. So I just want to make you aware of that, because I think this is also relevant in preparing the reporting in this coming period over the year of 2024. And now this is, let's say, the latest edition in a whole constellation of Q&As or Commission notice documents. And specifically, this last publication had quite some elements regarding the Climate Delegated Act on it, and those are relevant for reporting. If we can go to the next slide, please. Yeah, thank you. So one interesting element that we want to highlight is with respect to renovations. Now we know that reporting on renovations under the taxonomy, EU taxonomy currently is, let's say, not applied a lot. But I wanted to highlight this example for criteria 7.3 and 7.6. And what we found really interesting is in this answer that is addressed, as you can see highlighted in yellow, is that, let's say, for the loans, we now have to look towards criterion 3.5 and 3.1 respectively. So what this means is that instead of 7.3 and 7.6, which describe the installation, maintenance, and repair of insulation materials and renewable energies, we now have to look into the manufacturing criteria. So that, let's say, that's quite surprising after 3 years of having the Climate Delegated Act, that this is now highlighted. And I think for most of us, this was quite a surprise and quite new. If you can go to the next slide. Yes, thank you. So Here, I think this is also a little bit of the challenge, and one could even say that potentially that the Climate Delegated Act could be a little bit inconsistent here with this latest Q&A Commission notice. So on top you see 7.3, which is the installation, maintenance, repair of energy efficient equipment. And we took one example, highlighted in the screenshots. It's element C, so the replacement of energy efficient doors. So up till now, we have assumed that we have to basically abide by what is in the substantial contribution criterion. So basically check what the national definition is as implemented under EPBD 3, the current version of what an energy efficient door is in your respective country. And now with this latest answer, this is not apparently supposedly the way we should interpret it, but we have to look to 3.5. And a door is only energy efficient, let's say if it has an U value lower than 1.2 in this example. So just something that we found striking, and this is in answer 62 of this Q&A. There are a lot of other elements, but I think are interesting for you to see. If we can go to the next slide. Yeah, and I think highly relevant. I think most of us have been waiting for quite a long time on this, but 2025 is the year also that the Climate Delegated Act should be reviewed. These proposals have been published on the 8th of January, as highlighted by Marco. There's a deadline for providing feedback next week. And basically the introduction states it's a very long document, 350 pages, that they want to simplify it. So firstly, with regard to the do no significant harm, it's also highlighted by Denisa in her presentation. But there's, for instance, also some elements or economic activities they want to add or expand in the Climate Delegated Act. If we go to the next slide, we want to highlight certain sections of the chapter with regards to construction and real estate. So some proposals have been made here. And in particular, we want to highlight some observations that we found striking. Let me maybe start with what is not highlighted in the document. It starts out with that the platform did not have enough time to read all the feedback that was provided via the stakeholder request mechanism last year. And also the economic activity specific to no significant harm criteria have not been addressed. So this chapter only delves into substantial contribution criteria, in particular for 7.1, 7.2, and 7.7. And one interesting remark is that they, of course, mentioned the forthcoming EPBD 4, which is set to be implemented next year throughout Europe before June 2026. And it's stated in yellow, the EU taxonomy should be well above the requirements put forward in the EPBD. And I think that's also, well, in the current version of the taxonomy, and sometimes, for instance, with the NZ minus 10%, that has created sometimes some practical challenges. So I think that's an interesting remark to set the ambition level higher than EPBD 4. Definitely something to consider, and you might have feedback on. If we can go to the next slide. Then some of the new criteria, and this is basically a summary because it's elaborated more on in the document. So they make a distinction between short-term and long-term recommendations. So starting with the new criteria, they want to basically also take the zero emission building as a starting point of the EPBD 4. But I think what is really interesting here is that there's a certain implementation timeline, roughly from 2028 in the EPBD 4 original in the legal text. So potentially when we implement a ZEB criterion in the updated Climate Delegated Act, we could potentially have a timing issue. Also, quite some references are made to, let's say, global warming potential limits. Also here, I think the same remark is that it would be interesting to see if the platform really recommends to come up with stricter criteria than written in the EPBD 4 as nationally implemented. So here you see that potentially the ambition level is higher, and one could ask if a level 2 text is, let's say, the appropriate place where all countries are working hard on implementing EPBD4. Going to the next slide. Renovation. So I think here they propose to replace major renovations with the definition of deep renovations. Just one observation is that there are no hard timelines on the implementation of the deep renovation criteria in EPBD4. Secondly, it's not really know if deep renovations need to be centrally registered. There's no hard requirement on this in EPBD4. And this was really the problem with EPBD3 and the criterion on major renovation. So also here, the timing issue plays a role. So let's say if they want to improve it pragmatically, this is definitely something to keep in the back of our minds, because potentially another criterion such as label upgrades could be also more friendly to understand for homeowners. A last point that I want to make on the renovation is something that is not addressed. And one of the two reasons why really we have not really seen a lot of reporting on the renovation is one, that the criteria are, let's say, relatively technocratic, but also that you only can count fractions of loans unless the underlying building goes to an EPC of class A. And this is, of course, also from an accounting and data perspective, complex if we work with fractions of loans to say that something is potentially aligned for the green asset ratio. So potentially this is also something that can be reconsidered in the update, because that will make assessment a little bit more friendly. And then on the next slide, we have the last criterion, and it's for existing buildings. So here quite a lot of references are made, for instance, also applying schemes, for instance, labeling schemes, voluntary schemes. That's, I think, definitely interesting, but for residential buildings, one could observe that you might want a more deterministic criteria. Also, I think some elements that came back in the feedback request mechanism that I did not see back in the platform report is the request to maybe incorporate also a legal mandate on the data. So for the GDPR, I think that I was surprised to not see that in this proposal as well. And then some other recommendations on, let's say, real energy use, etc., fossil fuel ban. That's also not really per se mandated in EPBD4. So it's interesting how that develops. Thank you. This was it from my side.
Perfect. Thanks a lot, Vincent. This is great. So just to conclude, what are the benefits to embracing Engage and to participate? Well, you can see here we are proposing an add-on to the existing disclosure requirements that everyone is familiar in terms of for example, the securitization regulation. We have one template, one size fit all, because the most important thing is this is not only for securitizations, but really is also for mortgage portfolios as well as for covered bonds. And what is also very important is that the proportionality, i.e., if the information is not available, you can also use the no data options. Clearly, we will, together with the whole Engage team, support all other test users that are interested to test the portal, for which, together with the Hypoport, we will provide a very detailed presentation over the course of the next webinar that is scheduled on the 27th of February. It's also important to stress the use of the Engage solution is basically free of charge till October 2025. Next, please. Yeah. So here, how do you become a test user? Well, you can just request the access to the templates first. You can have a demo where we explain to you how are the templates. Then you can submit to the portal the data subject to a specific legal agreement. The fact of the matter is that you tend or the users tend to send simple sample files at the beginning, and then they become larger and larger, like also Katia was mentioning earlier. Next. Important, we have a series of upcoming events. So as I said, the 27th of February and then 27th of March, you can register. Now this year, all the events, all the webinars are going to be in via Zoom. But next, we also have some specific in-person events where you are gonna have the possibility of meeting in person some of the staff from the Engage initiative. The next one is on the 26th of February at Bird in Milan. Then we are gonna have Audvi in Amsterdam in March, and so forth. So please keep being tuned, and thanks a lot for participating today. Please feel free to contact us if you have any questions or any other issues that you would like to discuss. Here we can see also, please feel free to visit our website at Engage for ESG. You have all the links in terms of registering for the future events, and also the social media. In a couple of months also, we are going to come up with a newsletter towards the end of March, given the high level of developments that are, they were discussed and presented also from Denisa. So at this critical time, I think it's very important to keep updated. So I would like to thank Denisa, Katia, and Vincent for their presentation, and wish you a great rest of the day. Thank you.
Thank you so much. Thank you. Bye-bye. Take care, everyone.
Thank you. Bye.
Thank you. Bye-bye.